In this UTG guide, I'm going to share with you the video that the crypto whales do not want you to see, because the whales in this space have all the alpha. They're always one step ahead, but with the right tools that I'm going to show you in this guide, you can spy on literally everything that they are doing, so you can jump on the trend before anyone else rather than following the trend and getting dumped on. All of these tools are 100% free, and in this crypto pothu guide on Twitter, I'm going to share with you everything you need to know. You want to trade like the whales, you want to be like the whales, stick around as I dive right in. Yeah, what is up guys, Tex here. Hit that subscribe button, hit that notification icon, and make sure you like and comment on this video. I'd love to know if you have any secrets for following the whales or additional things that we can add to this crypto pothu guide on Twitter. So a crypto whale, for those of you guys who are new, are the biggest traders in the space. We're the small fry. Those guys are the big guys that move the markets with their 1,000 BT sell, 1,000 Ethereum sell. We want to know what they're doing, how they're doing it, and following these wallets so we can see exactly what's going to happen before the market is moved with their transactions. So as Pothu says here, whales have all the alpha. They're one step ahead. With the right tools, we can see everything the whales that they do, everything the whales are doing, and that information can make you exceptionally rich. So as I said here, a whale movement is a large crypto transaction. It's a simple signal that can have a colossal effect on the price of a cryptocurrency. In this guide, we're going to look at types of whale transactions, market depth, finding wallets to track, and tracking and analyzing those crypto whale wallets. And each of those have different price signals, so it's important to know how to identify each of them. So 1, sending crypto to an exchange. Exchanges are fairly easy to identify on Etherscan. They're usually labeled, and in the picture below we can see 400 ETH is being sent to KuCoin. So we're looking at the transaction data, we're looking at when it occurred, we're looking at where it was going, and we're looking at the size of the transaction. Now this is a huge one as well, 2,700 Ethereum. And you can find this information by going to etherscan.io. And from here there's a bunch of free resources which you can go to look at transactions that are happening on the blockchain at the moment and go through, put in some data, put in some fields, and you can track these whale wallets. Next, when you see that a crypto is being sent from a regular wallet, or it could be an offline wallet to an exchange wallet, or a standard wallet to an exchange wallet, it usually means that someone is about to sell. So from that 400 Ethereum transfer above, we could surmise perhaps that 400 ETH is going from a wallet that's been sitting in a bit of storage. It's going to an exchange so they can sell it for USDT or another currency. And when those large volume sales happen like that, it will negatively affect the price of that cryptocurrency. Now, Ethereum is a little bit unique in the sense that it and let's say the top 5, the top 10 coins have billions of dollars worth of money within their ecosystem. But if you're looking at top 100 to 200 coins that are lower liquidity coins that could be moved by a few $1 million sell, this is where this gets really, really interesting. Next, hundreds of millions of dollars of a cryptocurrency being sent to an exchange could greatly add to the sell pressure and even crash the price of a token. Absolutely right. Next, sending crypto from a wallet to an exchange. So in the picture below, 2,000 ETH is being withdrawn from KuCoin. As expected, moving crypto off an exchange creates upward pressure on price. So we can see here, we've got the transaction data, when it occurred, where it was going from, where it was going to, a 2,000 Ether transaction. Huge, 2,000 Ethereum. So whales are less likely to sell if they just move their holdings off an exchange. Enough whale movements off exchanges and into wallets for a specific cryptocurrency can cause sudden reduction in market-ready supply, and this can even be rocket fuel for price action. So if they're moving it from an exchange to a wallet, they're looking to hold and sit on that currency as price accelerates to the upside. You definitely wouldn't be taking something off an exchange and holding it with the anticipation of it dumping, because you would just convert it into USDT or a stable, sit tight, let it dump, and then pick it up at that lower price. Now for us, when we're transacting with, tens of Ethereum or hundreds of Ethereum, it's very, very different for when they're transacting with thousands of Ethereum, where a $10, $15 price move can create massive issues to the downside or moves to the downside that would put them in some serious loss territory. Next, a wallet-to-wallet transaction. Some whales don't like exchanges. The large amount of crypto that they're looking to buy or sell could stir up the market. So what they'll do is they'll do something called over-the-counter trading, which is OTC. You may have seen that before. This allows big investors to buy or sell large amounts of crypto directly from an exchange or custodian at a fixed price. So wallet-to-wallet transactions are a red herring. These transactions don't typically influence the market significantly. Moreover, it's impossible to know who's buying or selling until it's too late. So how do we keep up with some of these whale transactions? Well, one of the best ways to keep up with whale movement is through Whale Alert. It's a page on Twitter, completely free. You could go to something like IFTT, if this then that, set up a webhook so that every time that crypto whale fires from Twitter, you fire it through a webhook into your Discord server so you can track things in real time. Alternatively, you could have the app and turn on alerts for Whale Alert, as I have done here, of course. And you'll see details or information like this, for example, 10,000 ETH transferred from unknown wallet to crypto.com. So that might be an internal transfer from an exchange, for example. We see 20,000 ETH, which is 27 million, transferred from unknown wallet to FTX. That's probably FTX making some transfers between their own wallets. So market depth. What size transactions should we be looking for when we're tracking wallets? Well, this depends on something called market depth. Market depth tells you how much money is required to push the price of a crypto up or down on any given exchange. The more money it takes to push up or push down the price, the greater the market depth that crypto has to us. So you can easily go to something like CoinMarketCap or CoinGecko, and in the picture below you can see that the market depth for ETH by exchange. This shows how much ETH needs to be bought or sold on a given exchange to push the price up 2%. So we can see on Whitebit, 50 million required, in BTC terms, USD, and as we go down, it takes 16 million bucks to move that. So some serious dollars to move that, but certainly on eToro, it takes far less. Now you can go to Ethereum, you can go to coingecko.com, go to the Ethereum tab, and you want to click on the markets tab. You can do that for any coin. So from there, it will show you the 2% plus 2% minus depth to move that crypto on that exchange. So market depth is important when considering how a whale movement will affect the price. If you see $10 million worth of ETH being transferred from a wallet to an exchange with a market depth of 20 or 30 million to the downside, then the effect on price could be negligible. But most altcoins have much lower market depth in the millions or even less. A $10 million whale movement would have a huge effect on price here. So that's going back to what I mentioned a moment ago with respect to liquidity of a coin. When we see, let's say, shit coins that have far less liquidity, far less market cap, those are the coins that could be very easily influenced by a few $100,000 buy or a few $100,000 sell. Whereas something like Bitcoin, AVAX, your L1s, for example, a couple $100,000 is really negligible in the terms of a $500 million market cap. So it really means very, very little. Again, guys, don't forget, hit that like button, that subscribe button, show a little bit of love. We do all this free for you guys because we just want you to be a safer, smarter trader and not get chopped up. So, finding wallets to track. Etherscan and debankdefi are two really great ways to find wallets to track. Debankdefi, I believe there may be some paid things in that, but again, I would just use Etherscan. It's very reliable. I've used it for many, many years. So you can easily view how much money is going in and out, as well as the change in holdings. Here you can see the holder breakdown for Uniswap. So it shows you what the accounts are made up of, what's in the accounts, and the percentage holdings of that particular, or the top 100 token holders. So a really bad sign is when a large percentage of tokens are sitting in exchanges. A lot of top holders are getting ready to sell. So remember, big exchanges from wallets to hot wallets or wallets to exchanges, bad. From exchanges to wallets in big numbers, good, because they're looking to sit and hold on that money. So a great strategy to find wallets to track is to look at wallets that got in big positions early. They might be good at identifying tokens early. To do this, look through the transfers history and sort by last. So go bang, last, you go through your history and you're looking at this particular coin, for example, and then you're looking at where it was sold, where it was sending to, 87 days ago, 4,977. So if big wallets are buying long-term, or buying and holding long term, they see future value in that particular coin. So you want to look at the big wallets that are buying big amounts of a coin and follow them and see what they do. Of course, you need to understand that these whales get chopped up as well. They're not the be-all, end-all, but certainly it's a good litmus to understand where the money is flowing and what coins might be ready for some serious upside moves. So look for wallets that bought a lot early. This only works for relatively new coins, though as Etherscan only keeps track of the last 100,000 transactions, which can go quite quickly. So let's do this for AXL. This sale looks interesting. This account bought 166,000 AXL tokens just weeks after the initial sale. So 166,000 bought 111 days ago on Uniswap, sent to their wallet, and then next you can go and you can view the address in the block explorer. It's a good idea to see if this person has a history of making winning plays. So look through their ERC20 transactions, their Ethereum based token transaction history, and see if they've had success in the past. If so, they're likely worth following. So you can look at exactly what they bought, how much they bought, and what token it was. So finding wallets on debankdefi is really simple. Debank ranks top ERC20 wallets. This is a great place to get started. So this may be a paid service, but certainly if it's worth pennies to get into it, you can track the biggest holders of a particular card or ERC tokens and simply follow along and see what they're doing. All right, so analyzing wallets. So most altcoins are heavily correlated to Bitcoin. A Bitcoin whale movement could crush your favorite altcoin. Every day we see a few whale movements for blue chips. Some of these are large, a few of them are massive, and they have predictable effects on price. One of the things that's rare is an old Bitcoin wallet making a transaction for the first time in a long time. These transactions could shake up the market and usually make crypto headlines as well. When you're looking to analyze wallets, keep in mind that the tokenomics of the crypto and which whale wallet the transaction is coming from. That's it. And that's everything that CryptoPother has given to you in 31 steps on exactly how you can track whales. So this is a quick one, only 12 minutes so far, but that should give you everything that you need. I will put the links to CoinGecko and Etherscan in the below show notes, but I would love to know from you, is that a comprehensive enough list to follow whales? Have you got more information on how to follow whales, and how do you use that info to get in early on trends or to identify what to buy and sell? I would love to hear from you in the comments below. Hit that subscribe button and hit that alert icon. Lots of content coming from UTG in the next little bit, ones that can make you a whole ton of money, and everything we do is completely free. UnityTradingGroup.com. I am Tex. Thank you so much. Take care, trade safe. See you next time. Bye.